Good morning and welcome to Morning Markets with True Potential. Markets were in buoyant mode yesterday. We saw gains across all equity markets except for emerging markets. Particularly in the US, we saw gains of around 1%. What was behind that move was a sharp rise in oil prices. That was on the back of weaker inventory data. There was a larger drawdown on US inventories overall. We also saw OPEC coming back and pushing back on production increase chances, so which has been drastic, been baked in over the past couple of days. So overall, oil markets boosted the energy sector in the US, which boosted overall market sentiments in the US. Though, as I said, earnings were also came in better than expected from the likes of Best Buy and Abercrombie & Fitch. Earnings came with much ahead of expectations and also reaffirmed the full year guidance in the sense. If you focus on Asia and emerging markets in general were weak yesterday. It's down to the rising COVID cases in China, which has hit their April highs, almost April highs. Yesterday, we saw Beijing recording almost 8,000 fresh new cases. So there's been overall sentiment has been weakened in wake of the rising cases in China. If you focus on the bond markets, a fairly muted reaction. There was not much movement in the bond markets. We saw 10-year gilts coming in by 4 basis points. Similarly, 10-year Treasury yield also came in by 7 to 8 basis points yesterday. What was, despite the reaction was muted in the context of we saw two federal governors yesterday coming out and reiterating their hawkish bias for now. So, but bond market generally has ignored that message, and then focusing on an expectation of the FOMC meeting minutes, which will come out later today. If you focus on here in Europe, we saw the consumer sentiment and the consumer confidence in Europe improved from their September reading, but still remains firmly in negative territory. As we know, the consumer spending overall has been weakening in the economy. On the data front, it's been fairly quiet the last 2 days. No major data coming out over the past few days. We saw some regional Fed activity data in the US coming out showing some improvement, but the bigger data will start from today. We will get the flash PMIs numbers across US, Europe and the UK. We will also see, as I alluded earlier, the FOMC minutes from the November 2nd meeting. Why they are important, given that it's in the past, the meeting has been in the past. The reason it is important, the key message we got from Powell from the November meeting was the pace of the rate hikes will slow down as needed. But again, he walked back on some of those that message in his press conference, where he reiterated his hawkish stance overall. All in all, we expect the minutes to be a little bit on the dovish side, as there have been decreasing consensus amongst the governors in general over the past few weeks over maintaining the overly restrictive policy stance. But it's important why investors will be very keen to know how big the divide is and how will that impact the December meeting and the rate hikes. Will it be 50? Will it be 25? Will it be 75 basis points? Largely, we expect around 50 basis points hike in December, but it'll be important to get the divide, how divided the FOMC meeting. So far, we know that FOMC have been fairly collegiate and tightly packed overall. So we will see how that divide comes on. As I said earlier, we will get today the PMI data we'll get from the US, from Europe, and from the UK. We saw this morning some PMIs in Europe coming out weaker than expected, but again, it's a confirmation of what we already know. The economic activity in the region has been slowing. We expect similar trend to continue in the UK in a few minutes, and also in the US later today. Why these are important numbers? Because these are the last prints we'll get before the central banks in the US, UK and Europe go into their December meeting. Finally, we also will have some housing data which has been continuous softening over the mortgage rates. So we'll see how that softening continues to play in the housing markets. But as always, we'll keep you informed with the latest development in market data coming through. But stay tuned watching Morning Markets, and thank you very much for watching.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.